Welcome to Podkey Daily News, where today's brief runs from FIFA finance to missile factories. A lot of today's biggest stories come down to strain under the surface. AI trades looked unstoppable until leverage bit, GDP looked soft until you checked the internals, and several geopolitical flashpoints are now testing how much slack the system really has. The most immediate risk story is the US-Iran escalation. The U.S. carried out heavy airstrikes on dozens of Iranian Revolutionary Guard command centers, missile sites, and related targets after earlier attacks, including one that killed U.S. soldiers in Jordan. Iran and Iran-backed militias then hit back across the region, with missiles striking sites in Kuwait, where a worker at a Chinese firm was killed, and others aimed at Jordan, where some were intercepted. U.S. and Saudi strikes also hit militia bases in Iraq, reportedly killing around 20 fighters. So this is now a broader regional exchange, not a contained one-off retaliation. What matters next is whether this stays in the tit-for-tat lane or slips into direct state-on-state escalation, especially with regional allies sending mixed signals and some pushing de-escalation, even as strikes continue. The Ukraine war is also pressing harder on NATO's edges. A Russian-type missile landed in Poland about 100 kilometers from the Ukrainian border, leaving a 10-meter crater and triggering NATO scrambling and debate over intent. At the same time, Russian attacks have reportedly destroyed roughly 80% of Ukraine's electricity-generating capacity, which raises the pressure for faster air defense deliveries before another winter crunch. That urgency helps explain why the Pentagon is pushing more than $120 billion to accelerate missile production, including about $59 billion for Patriots, which are expensive, slow to build, and badly needed, after multiple overlapping conflicts drained stockpiles. The watch item here is industrial capacity, because funding requests matter less if factories can't scale quickly enough. On the U.S. economy, the headline said slow down, but the internals were stronger than they looked. Second quarter GDP came in around 1.5% annualized, partly because heavy AI-related capital spending pulled in lots of semiconductor imports, and imports subtract from GDP even when domestic demand is healthy. A better read on that demand, final sales to private domestic purchasers, rose a strong 3.9% annualized, which points to resilient consumer spending and business investment. The problem is inflation is still too high for comfort. The PCE price index dipped 0.1% in June, but was still about 3.7% year over year, well above the Fed's target. Mortgage rates also jumped to about 6.60% for a 30-year loan, a one-year high that will likely weigh on housing even if the broader economy keeps holding up. That AI capex wave is producing very different outcomes across big tech. Microsoft gave the clearest monetization case. Yet, Copilot added about 10 million paying users in a quarter. Azure topped $100 billion in fiscal year revenue with more than 40% quarterly growth, and Microsoft shifted Copilot towards subscriptions, which gives investors the recurring revenue story they want. The enterprise use case also looks tangible. NHS England deployed Microsoft Copilot to 505,000 clinicians, with a reported average productivity gain of 43 minutes per clinician per day. Meta is getting a rougher reception. Management keeps pouring money into AI infrastructure while Reality Labs lost another $4.4 billion in the quarter. And investors still want a cleaner answer on how all that compute turns into durable profits. On the hardware side, Samsung is forecasting a global chip shortage through 2028 as customers lock in multi-year contracts, and its semiconductor profits surged on AI chip demand. A very different AI story came from finance. Situational Awareness, the AI-focused hedge fund founded by former OpenAI engineer Leopold Aschenbrenner, took heavy losses and was forced to sell a multi-billion-dollar public equity portfolio to Citadel. The point isn't just that AI stocks can drop, it's that leveraged exposure to high-beta names can turn even modest moves into a forced unwind. If you're watching the AI trade, this is the reminder that underneath the narrative financing structure still decides who survives volatility. In sports business, FIFA is testing how far it can push commercialization. The plan is to spin off or create a commercial entity bundling media rights and ticketing for flagship tournaments, sell roughly a 20% stake to investors, and distribute cash to member associations. Reported valuations vary, but the broad signal is the same: a minority stake sale worth several billion dollars and meaningful payouts, including one report of about $20 million for each of FIFA's 211 associations. UEFA and many European associations are threatening boycott unless the plan changes or wins broader support, and reported vote math suggests UEFA plus CONCACAF alone could already clear a blocking threshold in some FIFA votes. JP Morgan has reportedly been courting investors carefully after the backlash from financing the failed Super League, and critics are framing this as turning core competitions into a financial product. One supply chain story with serious strategic implications comes from the Democratic Republic of Congo. An FT investigation found naturally occurring uranium mixed with cobalt in Congolese mines, and at least roughly 2,000 tons of uranium has reportedly left the country embedded in cobalt exports. Most of that cobalt is processed into hydroxide in China, but it's unclear whether the uranium is discarded, recovered, or otherwise controlled in those processing streams. That opacity raises both environmental and security concerns, and DRC officials are now considering radiation detection on truck routes to Zambia while seeking donor support, including from the US, for better monitoring. Europe is dealing with two different forms of pressure at once: climate stress and migration stress. The heat wave in Western Europe pushed parts of France to around 111 degrees Fahrenheit, triggered record hot days, and has been linked to a very wide range of excess death estimates, from about 1,000 to 20,000 regionally. The fires forced more than 240,000 people to evacuate near Bordeaux, the largest French peacetime evacuation, and threatened infrastructure, industry, and even the wine harvest through smoke damage. Separately, Spain's Supreme Court ruling against summary returns at Ceuta reportedly helped trigger a sudden surge of attempted entries from Morocco, sharpening domestic backlash and pressure from some EU partners. In the US, a new USCIS rule is speeding some asylum cases straight to immigration court without the usual interview, adding to lower approval rates and a backlog above 3 million. A few faster items. Zoox got temporary U.S. approval to deploy up to 2,500 autonomous vehicles a year and start charging riders, a real commercial step for Robotaxis. Qantas completed a 24-hour non-stop test flight from Melbourne to Toulouse, another sign that ultra-long-haul routes like London to Sydney are moving closer to practical reality. At a Senate hearing, Anthony Fauci repeatedly invoked the Fifth Amendment, and Rand Paul moved to hold him in contempt, escalating an already politicized fight over pandemic oversight. And in a lighter note, a copy of the Antiquities of Athens made it back to an Australian library after about 150 years, with theoretical overdue fines of roughly $19,500. That's the brief for today. You've been listening to Podkey Daily News. The big thing to watch is where strain turns into breakage in markets, in supply chains, and in the security picture. This episode was generated by Podkey. Create your own at podkey.fm.